In this video, I'm revealing a powerful scalping strategy that can be used to trade volatility indices. Welcome, it's DC. If you're new to my channel, please kindly subscribe, like, and share, and don't forget to hit the notification bell so that you'll be notified every time when we release new content. So without wasting much of your time, let's quickly look at the settings. So we're only going to have, okay, let me just delete everything that we have here. So these are the settings. We're going to make use of a moving average. And the moving average will have a period of 20 shift 0, method exponential. Apply to here, you have to use low. And then the style is going to be 4 pixel with the color red. Then when you're done, click done. Then you're going to go back to this F icon so that, and we go on the trend indicators end. We're going to add another moving average. So the moving average this time we have a period of 20 again, shift 0, method exponential. Then here we're gonna use high. Then on the style this time we're gonna make use of the color green. Some might call it lime. I'm just gonna call it green. Then when you're done, you click done. So if you come back to our chart, we have these two lines that are moving on our chart. So basically those are the indicators that we're gonna make use of. So this strategy is very easy to use, and it's very, very profitable. So how are we going to make use of this strategy? So the first thing is this: you have to check on your higher time frame. Our higher time frame in this particular strategy is the H1. So that's the first thing that you do. So what you are going to be looking for on your H1, you want price to be above these two lines, the green and the red line. So that's the first thing. Price is to be above this if you're going to be buying. So we are looking at the condition of how we can buy using these indicators. So the first condition on the 1 hour time frame is that the price is to be above these lines. Then when price is above these lines, you then have to drop down to your lower time frame and look for positions. So now we're going to go to the 15-minute time frame. We've checked. So this is the let me just mark it so that I don't forget. So the date was the 21st of December. Then we're gonna go to the 15-minute time frame. Let's go to the 15-minute time frame. Okay, on your 15-minute time frame, now you drop down to the 15-minute time frame to look for an entry. So you can use the 15 or the 5-minute time frame. So when you come now to your 15-minute time frame, you're looking for a buying opportunity. How then do you buy using this strategy? So what you're going to be waiting for is this. You want to wait for price to first of all close above this green line. Prices to move upwards like what happened here, and then close above this green line. And you're gonna place your stop loss below the previous swing low or just below this red line. So if price closes below the red line, this is the red line, you exit the position because this red line will represent your stop loss. So if price closes below, you want a candle to close below this red line. This red line will now act as your stop loss or your exit if the price doesn't move according in your favor. So you want price to close above this green line, then you're gonna open a position here. So that's how you enter this trade, and then you're gonna wait. Your stop loss is gonna be placed just below this red line here. If a candle closes below this red line, you exit the position. Then on your 15-minute time frame, you can hold the position as long as the price is above the red line. You see, now here, this is where you're going to exit the position, where you now have a candle closing below the red line here. So I've given you the entry and where you're going to be placing your stop loss, and also the take profit. So let me just do a quick summary. You want a candle you want a candle here, you want a candle at this particular level here. On your 15-minute time frame, a candle has to be close above this green line, and your stop loss is going to be the red line. As long as price is still trading above the red line, you hold that trade. So you place your stop loss just below this red line here, and then you're gonna hold that trade as long as price is above the red line, and you only exit when price closes below that red line, because there can be a possibility of a reversal. So your entry is at this particular level, so you're gonna enter here. This is where we entered, and you're gonna exit at this particular level. at this level. You can see, so your entry is here, and you're gonna move up and target this level. So this is where you exit. So basically this is how you buy using this strategy, and then you can wait again for another entry. We can see price then at this particular level, price then closed above again the green line, which was at this particular level, and you're going to enter here. Your stop loss here, if this happens, the trade is too valid. Your stop loss has not been hit. Why? Because these candles did not close below this red line. So you can still hold that trade. And we can see price then started to move upwards. You can see you're going to hold this trade until price. So you're going to hold this trade from here until price closed below this level. So we can see we have a lot of winning trades in this particular level. So let's look at how we can sell using this particular strategy. So let's go to the 1 hour time frame, and we can see during this period from let's just mark from here, this period here, we can see price was below the red line. So when you now want to sell on your 1 hour time frame, which is your higher time frame, you want the candles to be below, these lines, like what took place here. And then you then drop down. If now the candles are now below the two lines, you then drop down to your 15-minute time frame, like what happened at this particular level here. On your 15-minute time frame, you're now looking for an entry. You're looking for an entry, and we can see at this level, let me just remove these lines, and we can see that we have a candle here closing below the red line. So when a candle on the 15-minute time frame closes below the red line, you can now open your sell position, and your stop loss has to be above the green line, which is this line here. So if a candle closes above that line, you can then immediately exit. So this is how you place your stop loss, and then you're gonna hold that trade as long as the price is below this green line. If price is below, doesn't close above the green line, we hold that trade. And we can see price was dropping down from that particular level. We can see here, this is where you're going to exit. So your entry was going to be here when price closed here, and you're going to exit at this particular level. This signifies when a candle closes above the green line, it signifies a possible reversal. So you need to exit that position. So this strategy is very easy. It gives you precise entry and exit points, and you can easily place your stop loss, and you can ride the trend for a very long time. So this is the strategy that I had for you. So this strategy can work in all volatility indices, and I'm going to review how you can use this strategy to trade the step index, jump, and other assets that are there on the derivative market. So for our services, we have our mentorship program, and we also have a VIP WhatsApp group, where I share the risk synthetic indices signals on a daily basis. So we focus on boom and crash, volatility, jump, and also step index. So we also have EAs and our robots. We also have free EAs, and we also have paid EAs. So if you want to get a copy of the free EAs, just subscribe, like, and share, and comment on this video. So on this video, we are currently giving out a volatility EA. So if you like, you subscribe to this channel, and then you send me a screenshot, and you also comment. If you send me a screenshot, I will then give you that volatility indices. Then we have also created a volatility group, where I'll be sharing on Telegram one free volatility signal. So if you want to be part of that volatility free group, just make sure you subscribe, you like, and you comment, and you send me a screenshot on my WhatsApp group, and I'm gonna insert the number that you can use to contact me on WhatsApp. Use WhatsApp for now. Just use WhatsApp. I'll give you two numbers that you can contact, and you send me those screenshots. Then I'll add you in those group, and I'm also going to post the free volatility EA in that particular group, so you can also download it in that particular group. Okay, guys, this is what I have for you. So what we're gonna be doing this this January, we want to increase the number of our subscribers. We're gonna be dropping on a daily basis a strategy, be it volatility, be it boom and crash. We'll be dropping a video on this YouTube channel. So thank you guys for your time. Enjoy your day. It's bye-bye for now.